Welcome to Trading Lounge and the gold silver report for the 12th of March, and this is gold here on the monthly, and we're looking at the low of wave 4 here. Probably been looking at it yesterday as being in place, so we still need to gather a little bit more evidence of that in the move up there, but it's looking better all the time. Wave 1 and 2 here, and 3 and 4 and 5 moving up through here. Once it completes up here, I'll just go over this a little bit. Where are we here? We'll be looking for 5 waves to the upside here. And that can take us, normally what I find when I'm working with the levels, trading levels, that we would be working to get this high here. We would be looking anywhere within group 1. So group 1 is 100, 200 and 300. If we get a tested support on top of 300, a classic trading levels pattern and support on top of 300, then we can push up to 500. But normally what I find is that this 5th wave here normally terminates in this space here. It's something that we'll manage, but we're looking in a nutshell for 5 waves to the upside. On the weekly chart for this, the level that we were expecting it to pull back to in this box here has arisen here. So, yeah, it's not to say that this is the low, but we're working one of the concepts that has a low in place here. So we still need to gather some more evidence. But we need to start looking at being on the long side and looking for those building in the beginning of the trend. The money's in the turn, but so is the risk. So we need to manage the risk and the exposure in any of these moves up here. Also, I think it's worth looking at just reminding you about this is the US dollar index, the DXY, and this is a weekly chart, so it's going back to 2018 for this low here. We've been looking at this as an A wave here, a B wave over here, and a C wave down here. It gets a little bit messy here, but in the C wave we're looking for 5 waves of orange here, of minor degree 1 and 2 and 3 and 4 here. So yeah, let's go into the daily chart and just have a look at that so you know where we are. So on the daily chart we can look at wave 3 here and 4 here, and I know this wave 4 is overlapping or coming close to wave 1 over here. Well, even we could call this wave 1 here as well by the looks of it. What's this other thing here? Don't need that. Things are messy enough. So the main point here is that this move here is corrective. We're going to go into the 4-hour chart here now and just take a look at this. So I know that everybody thinks, not everybody, but a lot of media thinks, and very important people think that that the US dollar is going to crash. I don't know. Elliott Wave's just not telling me that, but always one step at a time. First of all, this move from this low to this high here, we need to understand that the first leg up here is not in 5 waves, it's in 3 waves. So an A and a B and a C wave here to make the A wave. You could have it as a W as well, and you could have this as an X here and a Y here, and we'll talk about that. But this move here is corrective. So whatever happens to this rest of this pattern here, it's corrective. So I'm thinking we are seeing gold push up, and we're seeing the US dollar index push down. So we need to understand this a little bit. We're still not quite out of the woods. Once this trend here starts, it'll take us down to 88. That's when we'll start to see that strong move in the gold market. So as an A wave, a B wave and a C wave here, the C wave here would be in 5 waves. So that would be up for 1 here, back for 2 here, and up for 3, 4 and 5 here to make wave 4 and then go down. And we can still do that from here. But what we're seeing here is this wave 4 here is starting to overlap the top of wave 1 here just. I can allow a little bit of overlap, but if we get a sort of a significant move down through here, and you'll be able to see that as well. Then you know that we're going to end the top here, this wave C here with 4 here, as 3 waves, an A and a B and a C wave here for a W, X, Y pattern here for wave 4, and then we're going to come straight down from that point there. So we talked about this yesterday, and we just need to sort of focus just to see how it goes here. It's looking that like this is an A and a B and a C wave here for this. But we'll just see, just give it a little bit more chance. We just, you know, sometimes they just sort of catch you off guard a little bit. So we'll just see. But if we do get this move up here, that's going to see gold correct. And if gold corrects, retraces, pulls back while the US dollar index is pushing up, that's going to give us an opportunity to move into gold at the right time. So that's what I want to talk about again today. Is what we talked about yesterday. I'll talk about it today, and we'll talk about it in the next video as well, because this is all the beginning, you know, of a change in trend here, possibly. I mean, it still looks like to me, just looking at this here, that it's got further to go down, but we have been, well, we can just look at that. There is this pattern here that does take us further down, and we've been, you know, figuring this one out. It's still possible, but the little move up here appears to be sort of impulsive. So you can start to move into gold stocks, but you just need to be a little bit careful how you manage your risk and exposure in that regard. In terms of it being a bullish count, then we can move into our bullish count here that we've been tracking for quite some time, which is WXY here, and finishing as an A and a B wave to here, and then finishing in 3 waves here for the C here. So this is all not said and done at this point, but we are seeing this move up here, so we need to manage that there, and we need to find a way in on the long side and so on. So that's what we're going to talk about today. We've talked about it before, and we're getting a little bit closer each time. So we just need to continue to gather evidence here. But as soon as I can recognize that it's actually corrective and we still got to move down again, then, because this can still be a wave 4 here, we still look at this as 1 and 2 and 3 and 4 here, and then move down from that point. A wave 4 can move back up 40%, 38.2%, but sometimes wave 4s go, you know, up to 50% when you get those sharp drops there. So we just really still need to be careful. So we're right at the 38.2 and close to the 50 there roughly. So and the move up here is not the best looking sort of impulse wave at this stage. So we just need to work that. So I'm just going to go from here. I'm just going to go straight to the tick chart here and look at this, and we'll need to bring more data in, and we're just going to pick up from yesterday looking at this. So this is where we were yesterday. I know it's a little bit messy, but we'd counted up here as 1 and 2 here, and I pulled all this apart, as you know, and we've got that as wave 3 here, and then we're looking for wave 4 here, and then we're looking for 5 waves up to this point. So I obviously need to clean all this up and stuff, so I haven't got it all nice and ready for you, but I think it's kind of good sometimes when you can work with me to see what I'm doing. So what we can do here to start with is we can look at wave 5. I need to straighten some of the other stuff up. But in a nutshell, what we talked about yesterday was getting this top in play here, and then having an ABC back here. So it's a little bit dodgy, but we're on the right track. It's just a drunken walk home after being at the pub. Not that I drink anymore, but too old and want to live a little bit longer. So we can, first of all, we need to, probably 1 glass a day would be good, but or 2, but it's not really my nature, unfortunately. So this is where we can pull back to, obviously, and probably the 710 here. The 720, the 72 number always plays a really strong part, as you can see here, wherever you see the number 72, and you can see it as 772 or 272 or just the 72, wherever you see it. It just, I don't know why it works that well, but just does. So yeah, okay, so this is where we can pull back to. Let's get rid of this. So we already talked about having a bit of a long trade here, that the risk on that and all that. So that's something that you may have done or may not have done. But what we can also do too, if we copy that, because we'll need to have a stop in place now for all of this. And you don't have to do exactly what I'm doing. I mean, it's important that you do your own thing. So we're looking for an ABC pattern that can pull back to the 1700. That's the bottom line. Okay. Will it pull all this way down into this? I don't know. We can start having a look at the count, and the count. This looks like. Let's just open it up a little bit. Well, I think it goes like this, so we can make adjustments for not really seeing that 5 waves come down here. Maybe that's it. I'm not quite sure, but 5, unless that's just the ABC, which I doubt. It looks a bit small. And then we still need the A, the B, and the C wave there. So just get rid of that. And then we need, okay, we've got them over here somewhere, haven't we? So this will depend on the US dollar index as well, you know that. So while that's going up to its wave 5, then this can pull back. So I can see that it's trying to do, I'll just leave it like that. So I think this here is 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave. The fourth wave and the fifth wave are 1, 2, 3, 4, 5. That's how I see that. I see all of this as the fourth wave. I don't know. It doesn't look like we've got 5. We should be making a new low here, but it just doesn't want to go down past that 72. And yet it may do all sorts of things. But being a wave 2, like from wave 1 here down to 2, we should be getting a pattern that looks like this, a zigzag. So a 5-wave structure, and then a 3-wave structure, which would be this A, B, C back up here for the B wave, and then another 5 waves down. That's how it should play out here. Is that the A, B, and C here, and we're done and dusted? Is that, would it be that low? Do we need to put that, because you've got to look at everything, it's not going to work, is it? Let's go lower. There we go. I mean, is that it there? I mean, it's possible. I mean, because it's possible, because that's what it is. It's a 3, 5, 3, 5 structure, and that is 5, 3, 5. So it's possible. It just has, found really good support on there, and could just go straight up from there. So that means that we would need to be a little bit smart about this, and we've got to prepare for. We've got to have everything locked down. So above this wave 2 here would be the next entry point at that point. Now, let's just go the other way, and let's look at this move down here, down to the 72. Even though it doesn't feel like it's finished here as wave 5, we still got to kind of like get our levels in. So, and this is the other interesting thing, isn't it? This is number 3 over here, 30. So 1, 2, and 3, 10, 20, and 30. This is the top of group 1 here. So I'm kind of I'm going to probably have to put that in as 5 and then look at an A and a B and a C wave here. So this will be 5 waves, 3 waves, and 5 waves. And what I was thinking about a classic trading levels pattern here, we want that first high above the level here. Once that's in play there, then you can drop this green line down on top of this one here. Okay, and then it may just come up here and then fail at that point and will come down into this space here. But if it moves up at that point, then you got it. Do you know what I mean? That's basically what it's all about. So that sort of covers us really, doesn't it? Like if it's market's going to move up, then we're going to be on it, but we're not sort of covered yet. If the market comes down in 5 waves down to this point here, then you need to find your way in here as well. So I'll be able to pick this up in the next video. So if it does come down through here, what we'll look at here is we'll look for the first impulse wave to the upside. We may be able to get it smaller than that, of course. And then we can look to go in long over this side here and build in here because we're at the 1700, we want to basically build trades in at 10, 20, and 30, and then again on top of 50 as well up here. That's our plan. So yeah, we're looking at that. If this B wave does come in and then it drops down here as well, then you put that line through the top of the B wave there, and that can be helpful as well. It just depends how high the B wave goes. I mean, if it goes really low, then you get a better position down here for that as well, because the wave C will drop under that level. So that's how that's how that looks at that point, at this stage. So we've been working it, haven't we? I mean, we've found the low and we started counting all our way up here, and we wanted to confirm that we're getting, you know, 1, 2, 3, 4, 5 here, which we've got. Because we've got 5 waves here, that means we should get an ABC correction, and then we can shoot up from that point. It still doesn't mean that we're out of the woods, because this could be an A wave here and a B wave over here, and we go up for a C wave here. But it won't be the wave 4, because it would have moved too far at that point. So if I look, if I just go back to a chart where we've got the impulse, the wave 4 situation, as we looked at yesterday with just another count, but this, I've got it in green in the other one, it doesn't matter, but 1 and 2 and 3 here and 4 here, and that's the 38.2% retracement level across there. This is what we need to be mindful of here. And I know everybody's got their opinions, and that's good. What I'm just trying to do, I'm just trying to make money. I'm not actually trading this market, but this is how I'd go about it. So I would just, I don't choose a side. To me, nothing's too high, nothing's too low. I mean, I've been doing this since the early 80s, so I've seen a lot, and I don't get lost in the emotional event of it all. Well, I try not to, and we all try not to, but the markets are an emotional element. So we just got to be a bit mindful about this here. So it can be a wave 4. It can be an A wave, a B wave, and a C wave here, and then drop down. But what I'm saying, if we've got this right, and this is an impulse wave up here, that means that we'll get a corrective move here, and then move up into another 5 waves here, which will make that too high, won't it? It'll make this wave 4 here too high for this, because it's too far above the 38.2% retracement level. So it all boils down to, is this 5 waves here? That's the question. I've pulled it apart, and I can get 5 waves out of it, and that's my bias of it all. So we're trying to find our way in now. That's all we're doing. So at the end of the day, I don't know if it's the low, but yeah, I mean, it can have 3 larger waves here and then another 3 waves down here, but that doesn't really tie in with what's going on in the US dollar index as such, but possible. Let's have a look at silver, and we're looking at, like we did yesterday with silver, we're looking at it on the bullish count, and this is the bullish count here for this. So once again, I don't know if this is correct, but we're working it up off the low here. That's what I've been doing over the last few days, as you know. So yeah, so I'm happy with this being wave 4 down here, by the way. I'm just never really happy with all of this here. So anyway, let's go in and just pick it up from here. So wave 1 up here with an A wave here and a B wave here and a C wave here for this. I can squash it all into the 1 hour chart, so that's what I'm going to do. So we're looking at wave 1 here with an A wave here, an A and a B and a C wave over here for the B wave, and then looking at 5 waves down here for this to finish here as wave 2. So 5 of C of 2 here for that. So once again, this is also a little bit dodgy as well, but it works. So we've got wave 1 here and 2 here, as we went through yesterday. Wave 3, I've been through all that. Fits as an A wave here with 5 waves up here, an A, B, C here, and 5 waves up here for wave 4, and then 1 and 2 and 3 and 4 and 5. This move up here, it could be counted as corrective or it could be counted as impulsive. That's the basic bottom line of it all. But yeah, there's a few things that we can do with it. So if let's just be the devil's advocate here for a moment. Let's just say that this is the A wave, B wave. We're calling this a corrective rally here. So that's being the devil's advocate. So we're looking here at wave 1, 2, 3, 4, and 5 here. So if this was going to be corrective, it would be an A wave, a B wave, and a C wave here. If that's going to be corrective and we make a new high here, well then it's going to rule out that this is corrective here. And then we'll start counting it as an impulse wave to the upside. I think that's the best way forward. Yesterday, I didn't count this here or any of this here. So what we'd been doing here, so we counted 1 and 2 here, and we counted 1, 2, 3, 4, 5 up here, and so on here. Now we've got our top here. So, you know, I mean, I'm not sure what to do with this one here. Probably we could look at it as wave 1 and back for wave 2, up for wave 1, back for wave 2. There's a couple of different ways we could play it out here. I can't go 1, 2, 3, 4, and 5 up here because we're overlapping at this point here roughly. It's not such a big deal at this degree of structure, I have to say. But the important point here is that if that top there is taken out, then we can move in on the long side. Because technically, because we've got 5 waves, 1, 2, 3, 4, 5 here, and then A, B, C here, and then we'll call this 5 waves. So if that gets taken out, that's the B wave, so then we're on our way. This is that simple. Can you get in earlier? Yes, you can. But there's risk in all of that. So, but we'll just break that down. So 26, that's the closest largest number. And that's where the market's basically sitting on. So then between 26 and 27, the whole numbers, we can break this down into, well, let's just break it down here into 10, 1, 2, 3 is the Fibonacci numbers, 1, 2, 3, 5, and 8. When we're coming to 8, we've got group 2, which is 65, and then 72 in here, roughly. So that breaks that whole thing down. It's good using the levels because they, you know, it takes a problem, a space, and then breaks it into fractional points here that we can work with. So when we're looking at this now, we can say, oh, well, that's definitely the resistance here, isn't it? What number's that? 2620. And we go, okay, well, what about if that becomes the support? Could we move in there earlier? Because normally what we do is we normally move in on top of group 1 here. on top of the 3, and we could do that again as well here, but let's just say that I mean, we could count this up here. I can see parts of it I understand, some of it I don't understand. It could be corrective or impulsive, actually. Also, the other point here too, just to break the problem down further, we take this here, and then we see this here. So this so far here at that 2 there, that's the 50-60% retracement level there. So that's why we're getting, that's why it's sort of just sitting there. But what about if this block becomes the support, and it will become the support if we get the first high above the level and then get that little trading levels pattern there, and then we can look to go long at that point. And then we could do the same on the 3 here. So if your bet was going to be $3, well, then you can put in $1 here and then $1 here and then $1 up on the 50 as well, doing the same thing, just basically building to the upside. And it will also give us a chance to manage the risk as well, because once this trade clicks in here, then once that clicks in on top of group 1, we won't be coming back. We won't be coming back to this number. So that means that this trade we have in, then we can put the stop in at that point, and we can start to work it up, getting one position at a time to break even or close to it, and yeah, just managing that. So the bottom line is, we don't know if the low is in for gold and silver. There's a possibility it is, but the bottom line is, I don't know. But if it is, then I know what to do, and this is what we're doing here. So you get your normal trade position size and then break it down into at least 2, at Harvard at least. But that would be the safe trade take, because once that's triggered here, then it makes this an A and a B and a C. And because we have already counted 5 waves up here for this, that means that we're going to go into a whole new sequence to the upside. It would be nice if I didn't have this spike here, this bit here, because then it would have just left me with this nice 5-wave structure, and then I would know that we're going to get another 5 here. But this can be an A wave, a B wave, and a C wave here, and we don't come back. We just go, we just come down from this point. That's the problem. But we've got nice support. We've got half of structure here, kind of. So yeah, this is what we've got to work with. Sometimes it's better, sometimes it's worse. So we'll just see. This is not really performing here that well, but we'll just see how it faces up against its karmic history here for this. See if it can take that on in a positive way. Alrighty, I've waffled on long enough, so I'll bid you farewell and enjoy the weekend. Cheers.